I'd say these figures are worrying now.
I beg your pardon?
I would say these inflation figures are starting to look worrying.
Very scary. Very scary.
And what do authorities have to say?
I beg your pardon again? I'm sorry, Lerato.
What do authorities have to say?
Well, they're doing what they can, and they're giving us a dose of pretty strong medicine. We've got the central bank rate up to 16.5%. We've got overdraft rates here in Kenya at about 25%. So some people are starting to worry that the medicine may be worse than the disease.
Obviously, the MPC will be meeting later on this week. 60% of analysts believe that we're going to see a movement on interest rates. Others say the 400 basis point hike that was taken in the last MPC is sufficient and we should allow it to have its effects on the system. What's your view?
I'm of the latter view. My heart goes out to these companies that are having to pay 25% overdraft. You know, these are mainly capital-intensive companies, real estate companies. You cannot continue with 25% interest rate very long. My sense would be let's see what we're if this is sufficient. You know, the exchange rate here in Kenya went from about 85 to 107. It depreciated 25%, and now it's come back down to 90 shillings to the dollar. So we've appreciated 15%. All of this in the space of 3 months. I think this monetary policy, although it's not comprehensive, we're trying to deal with some structural problems with monetary policy. I think it is working. I think we may have lost that 85 to 90, but I think it's holding ground here. I think we ought to leave it where it is. As I said, we're taking some pretty strong medicine here.
Yeah.
We're under chemotherapy. We're starting to lose our hair and our teeth. I think we ought to see if this works.
You paint a very vivid picture there. Let's talk about the components of the CPI, what's driving inflation. Food, the index is up 1.35%. It continues to be the one thing that's weighing heavily on prices in Kenya. What about the short rains and the fact that we're starting to see improvement in the weather? That should have created a little bit of a reduction in prices, but it hasn't.
Well, you know, a lot of the cost in food here, processed food, is energy costs. Manufacturing those products, getting them to market. And as you know, Kenya is a net importer still. And I don't know the exact figure, but I'll bet you something upwards of 25% of our import bill is energy related. But if you think about it, as I said, in the last couple of months, the Kenya shilling has lost 25% of its value against the US dollar. It's recouped 15. So in the last month, we've seen a depreciation of the shilling of at least 10%. You take the prior 11 months, add that in, and you've got an inflation rate, of 17, 18%. It takes a long time to turn this big boat around. But I think it is starting to, we're starting to come to grips with it.
Yeah, I mean, to concur with your view, the inflation figures does show us that utility costs are rising by as much as 1.5%. So domestic fuel and transport fuel on the rise. Businesses have been complaining about fuel rationing, for instance, when they were talking about energy rationing. There have been calls for fuel price caps, all those kinds of measures, but they're not helping. So what's needed here?
Well, I think you need to tackle this head on. We need to find ways to substitute for the imported petrol. You know, we can do a great deal more in generating electricity through thermal power, wind power, solar power. This is something that we have an abundance here in Kenya. We need to focus on that, reduce that energy portion of our import bill, and gradually allow interest rates to come down, hoping that, of course, exchange rates hold firm. But we will not be able to grow the economy here. We won't be able to grow out of this unless we bring interest rates down. But again, it needs to be gradual.
Authorities would say by hiking rates aggressively at the last MPC, you're seeing the tangible effects in a depreciating shilling that you've referred to. For the average person, maybe that's not good enough because inflation is just so high. So when authorities consider the latest CPI figures and the reality on the ground, what are the options realistically that are available to them at a policy level?
Well, as I said, we're trying to deal with some structural problems through monetary policy. We've also got to look at fiscal policy. We've got to look at trade policy. Long term, we need to think about in terms of a balanced budget. We cannot be spending a great deal more than we take in taxes. But that takes time. And so what we're trying to do is hold the exchange rates here through a monetary policy tool. It's working fairly well, but at the same time, we need to be looking at longer term structural changes here. We need to, I'm not suggesting we raise income taxes, heaven's sake, no. We've got some of the highest tax rates in the world. But we need to get a handle, a grip on government spending. We've got a trade deficit, we've got a fiscal deficit, right. We've got a deficit in the current account. So we need to take a longer term view. We need to try and move toward a balanced budget. We need to find additional sources of energy right here in Kenya. It's going to be a process.
Okay.
And I feel for the average consumer here, absolutely.